Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the Greedy Trader channel. So once again, I'm going to be taking you through this video, which is how to use Market Profile step by step. Now I know for those of you guys who are completely new to the topic of Market Profile, you might not know a lot about it. So I'm not gonna get too advanced or too overly technical. If you want to learn a little bit more about Market Profile, I've got like a ton of other videos that you can look through and you can sort of build your bearings. Again, if you are looking at this video and thinking, how do I get hold of the tool, or how do I get this all set up, then I would certainly say that you want to check out another video that I've done on how to set up Market Profile for both Sierra charts and MT4, maybe not MT5, but for MT4. So if you look at the top right of your screen, you will see me link to those videos there. So check it out, and I'll also link to the videos in the description and in the comments. Awesome stuff. So let's look at Market Profile. So obviously guys, sadly this is not an entertainment session. This is a session primarily about Market Profile and how to use it properly so you can go out and make yourself some money. So again, if you clicked onto this hoping to have the flashing heads and jumping mics, sadly this is not one of those videos. For those of you who've been following the channel for a while, then this is just another video, and you can see that for my previous videos, you can see my style and the way I do things for the newcomers. So this is just me, right? Going forward, let's talk about Market Profile. Okay, so there are a couple of things when we're learning how to use it, right? So in terms of what are we looking for? Now, think of Market Profile in terms of what is it, right? It is a graphic representation of price, right? But not just price, but how much time did price spend trading at a specific level. What do I mean by that? If price is trading, say, between 125.58 and let's say it's trading between 125.79, then this is how long it spent trading within that level, and it gives you some insight, right? At the very least, it tells you that for some reason or the other the price is stuck at a specific level. We may not know why, but we certainly do know that it is stuck at that level. So I think as traders, we want to be able to take note of these occurrences, and likely they're going to be significant. Now, for those of you who have done my programs, which by the way, shameless plug, if anybody wants to talk, I did just talk about learning to use Market Profile, wanting to become a professional trader, etc, then feel free guys to DM me. The link to my Discord server is below, where you can find me, and I'm more than happy to talk to you about all things Market Profile. This is not some kind of magic bullet. Market Profile has been around since the 1980s. To a large extent, its development probably spans maybe from the 70s. Thanks to Peter Studemeyer, very brilliant mathematician and floor trader, we have Market Profile. It's not a magic bullet, but what it allows us to do is do something that for years traders have been trying to do prior to Market Profile, and that is segment the market. Most people can't segment a market. right? So we know what a daily profile is, we know what a weekly profile is, or we know what a daily candlestick is, but we don't understand the segmentation element of it, right? So can I take within a day 1 hour segments, segment them sufficiently that I can get data? You can't do that. With a candlestick, you're literally getting open, high, low, close data. That's it, right? And through time, that's all it's giving you, open, high, low, close data. Well, that is it's adequate if you are looking at it across a longer time frame, or you want like a snapshot view of the market, then that's great. To be fair, I still use candlesticks because in some scenarios it is easier to get a snapshot view. So it's not that I don't use them, but I'm not a fan of using them as an execution model or a strategy model. It just doesn't work, right? And that's because candlesticks give you snapshot data, right? So for guys who have traded a little bit more beyond CFD brokers and maybe have a brokerage firm that's on the exchange, you would understand the concepts between snapshot data and deep book data. Snapshot data gives you a snapshot of the prices, but it doesn't really tell you, it doesn't give you much more than that. It doesn't tell you what actually went on in a given day, right? So the historical record is snapshot, which is open, high, low, close. So I can tell you that the market opened here, it closed here, the highs were this and the lows were this, but you don't know what the lows were at 1 p.m. unless you were seeing that market at 1 p.m. You don't know what the highs were at 2 p.m. just simply because the data is not available to you. You can probably, you can break it down into 5-minute charts, 1-minute charts, and try and get this plethora of charts and do all this comparison, but that's a waste of time, right? What you're trying to achieve is a visual picture of what happened, but at deep book level, right? And that's essentially what Market Profile brings to the table. Okay, so recap. First things first, we want to understand what Market Profile is and what is it specifically trying to do. So Market Profile is a graphic representation of price action, not just on a horizontal plane, right? So where you see things, i.e. precisely open, high, low, close, but it's also giving you some deep book information, right? On a horizontal plane. I meant to say vertical plane, right? So unlike candlesticks, it's not giving you just vertical plane data. With Market Profile, it's giving you horizontal plane data, so you can see the market across time, right? So example, we can see here that this is the entire profile, which in this case is a daily profile, but we can also see the deep book data of what happened through the day. So typically speaking, if I was gonna interpret this was the open, so this little arrow here was the opening price, and to give us some visual perspective, we're going to split the profile. I don't like to do this in the beginning because then people get fixated on the rotations, but we can see here that this was the first auction period, which is a 30-minute auction, A period, B, C, D. So this is obviously the early Asia session, so obviously as you can see, and then we have the more liquid sessions as we come into our period where we start to see more movement, right? So if we click on that, we can see the exact time it is 08:30 European time, right? So again, it just gives us some perspective, and then the end of the day, right? So we have an idea here that this is A period, B, C, D, E, F, G, H, and these are all the rotations, 30-minute rotations to make up the entire profile. Now, because there is a filtering element to Market Profile, in that the profile is filtered, so it doesn't really print new TPOs, as we call them. So it doesn't really print new letters, that is, unless we did a new low or a new high, right? So if the price spends a lot of time trading here and then we enter the next auction, then T period will just spend time trading here. So it's given a little bit more of a deep book information. It's okay, we're trading here a lot, and this is causing every new rotation of form within, say, like S period, and this gives us a more clear horizontal view. So for example, down the bottom here, what you see, which is what you typically see with a candlestick chart, is vertical representation. So you see a wedge, right? A, B, C, D, E wedge, right? So you can see that, right? And that's what you see. So that would act as consolidation, right? But what you really can't see, and this is the beauty, is if I unsplit this, what you can't see is the information on a horizontal plane. So if we condensed it into a visual graphic, you can't see that, right? So you see a wedge, but this is really what a wedge looks like when you take all that information and you compress it, right? So now I can see the compressed wedge. Now I've got some ideas. Okay, if we've wedged out here, technically I wouldn't know this is a wedge until I split it, but for my purposes and my understanding, I'm just looking for where the bids are stacked, right? So when we see this, what we are seeing is bid stacking, right? That's pretty much what we're seeing, bid stacking. So if I'm seeing bid stacking, you call it a consolidation, you call it a wedge, I'm seeing bid stacking, right? That's all I care about. And if I'm seeing bid stacking, that's telling me that there's a lot of interest here, and if the market moves against this interest, we're going to get forced liquidation, right? So that could come in the form of short traders needing to cover really quickly, i.e. buy back their short positions before they end up margin called, or it could be in the form of long traders having to liquidate their positions again before they're margin called. So now I want to apply some statistical benchmarks to this information. So if I was going to look at this daily profile and describe it, I've got an offer stack here, because now we know it's an offer stack because we've traded beneath it, so it's an offer stack here, and then we've traded into a bid stack here, which is developed. So by the time we get into day number 2, which is this day here, for example, we have prior understanding of what really happened yesterday, right? So the day before, and that gives us a very clear picture that, okay, we had offers here, bids here, which means the bulk of the sellers are sitting up here. And as the market trends lower, we're looking to attract buyers. So in order to shut off selling, the market would move lower to attract buyers. So what we're looking for is, where is this going to occur? So we need to have relevant data to be able to justify this, right? So we're always keeping an eye on what's going on from a bid and offer stack perspective. But now to enhance that information, we're going to put some statistical benchmarks on it. So we got value low, and then we got value high. So that's basically just one standard deviation either side of the mean price, right? Now, if you're an options trader, this is an amazing piece of information, right? Because most of the time, options trade within standard deviations, right? It's why the stock market can feel so tight if you are a long-term trader, because again, you could be up 5 points, but before market close, you're down 3 points, right? So the intraday volatility is very high. So if you're owning a stock portfolio, it's the reason why portfolio managers are driven to say, we don't care about the noise, right? We just want to see the long-term alpha. And the reason this is the case is because they understand that intraday volatility is guided by things like the options market, right? So you can't really control that because people are swinging highly leveraged positions. I mean, we all just saw the huge tweet about Michael Burry's $1 billion short, whatever. A lot of bollocks in my opinion, but we all saw the tweets, right? And effectively, we understand that position was notionally quite small, right? However, it worked out to be a fairly large position, even though it's notionally small, but because options are leveraged tools, it turns out to be a bigger position. So we definitely want to factor that in. So when we think about these statistical benchmarks like value high and low, it's kind of what option traders will look at to determine whether this is a great place to buy or sell an option. Right, so market profile brings that additional edge because obviously it's widely used in the futures markets, and we also have futures on options, right? Or options on futures. So largely we are going to see that one standard deviation effects come into play. And it's really funny because I have become, on a personal level, a very range-based trader because of market profile, and it's given me an immense edge, right? So again, if I don't curtail myself on from a risk standpoint, you know, technically speaking, I could double an account every week, right? But obviously, depending on how much money, you know, easier to do with $200 or $300 as opposed to maybe a bigger account. But if you had like no risk, the maximal risk tolerance, and you were willing to perform just using market profile, you have an immense edge, right? Because you really get and understand these particular benchmarks, right? So again, these statistical benchmarks are what we call value, right? So one standard deviation either side of the mean, or the 70% value area, because technically we call it 70% because 70% of all the distribution tends to fall one standard deviation either side of the mean, right? So technically at these prices the market is undervalued, and at these prices it's overvalued, right? So it's really important, of course, when you come into your profile to understand where we're positioned relative to the prior day, right? So recap, we now understand that we can see the whole profile on a horizontal plane, so it gives us bid and offer information, which is deep book information, just because we're able to visualize what you would see on a level 2, for example, or a dome, where you've got, for example, layering, or you've got absorption, right? So if there's a big order somewhere and the market can't really chew through it, it will spend a lot of time being absorbed by the larger entity, for example, right? So again, that becomes an area of importance, right? So some people would put these volume profile things on their charts, and this gives them an idea of historically where those absorption levels have been. Now, I prefer the complete market profile as opposed to the gimmick of volume profile, because with market profile I can see this against I've segmented the data that I can see this against every single day, whilst being able to visualize an entire trend on a daily chart in one viewfinder, and also be able to see the intraday activity in the form of bids and offers. So don't tell me you have a better edge than me, right? Reality is reality. If you're not a market profile user and you're a big trader, you're probably already thinking about it. If you are a small trader and you never heard it, then this is the best possible place you could be if you're starting out with trading, just because it's going to save you a lot of money and time. This much I can guarantee you. Okay, so we get the overall picture. Now, to avoid this video being immensely long, I'm going to sort of do this in a spread series where, you know, I'll just do part 1, part 2, part 3, and so on. So please do check back to see the rest of the video. So I'm gonna just stop it here, but again, till the next video, adios. Alright, so hi guys, welcome back. So again, I'm just continuing off from the initial part of the video that I had to clip, just because I didn't want it to be like a massively long recording. But again, that said, I might end up condensing it all. So there you go. Right, so we were talking about the simple fact that you can get the statistical benchmarks that you need to get, as well as understand ultimately what you're visualizing in terms of the actual distribution of price. So we hopefully should fully understand this or have an idea. I'm going to re-split the rotations again. Now, we spoke about these in the context of auctions. So effectively what's happening here is that the market opens here. We have 30-minute auctions, and that forms your rotation. So it's actually really straightforward. The caveat is you can condense it. All right, so that was for a recap. So let's move forward. Now, the other aspect of market profile that's important, and for me, it is the single most important aspect. This nugget alone will save you a lot of time. Now, of course, if you're trying to DIY market profile, then I will leave in the link below a link to a free program that I did on Market Profile that you can have a look at and basically gauge yourself and see if you're going to need more learning, i.e. you can come to me directly. But that should hopefully help you as well get a little bit more of an understanding. But let's not put the cart before the horse. So let's just continue from where we are. But that's if you need any kind of additional help. Now, in terms of the next step, we're talking about the initial balance. Now, everyone has their idea in terms of the initial balance. Now, the initial balance is a slightly older concept in Market Profile. And it's old because it was done at a time when, well, some assets still open and close, but we have the after hours market. So everything is pretty much 24 hours, even the stock market. Most people don't realize that. Now, so again, this, take it how you will. But for me, it's an important part, right? So usually the initial balance will define the first hour of trading. I'm looking at a currency pair at the moment of pound sterling, so cable, and I've opted to do an 8-hour initial balance. And the reasons for this is very, very simple. I've decided to treat the early session, right, so largely Asia, that I consider to be very weak hands in the context of cable or the British pound. So that for me is a good benchmark as to reference what the European traders are going to see as value and what the American traders are going to see as value. Because the Asian market is the first one to open. So I want to have a beat on that, and as a result that has become my balance. Nugget there for you guys. Now, I kid you not guys, this information's for free. I'm giving you this stuff for free. I can tell you hands down people who will ask you for at least 20 grand to learn this stuff, right? If you want to learn this on a floor with an experienced floor trader, guarantee you no less than 20 grand. In fact, I know people who've paid 100 grand in order to get lessons. Right? Each to his own, right? But you're getting all this stuff for free. So let's have a look. So the initial balance for me is an important aspect, and it's an important aspect because it's going to help you in terms of understanding range, right? So range based plays. So again, without sort of over expanding this, you want to look at how we trade against the initial balance. Now, most of these markets are bracketed. What do I mean? So let's take the most volatile days today, right? So let's start with this one here. It's quite volatile. So we got the initial balance times 1, times 2, times 3, reversal. That's another nugget for you there. Initial balance times 1, fail, value high, offer stack, reversal, initial print, initiating seller. Broke initial balance low, 1, 2, 3, value low, 3 times the balance, reversal, gap in value. In balance break, 1, 2 into gap, hold, offer stack, balance break, continuation. You can see how that works, right? So if you need to replay the video again, then replay it again, right? So I don't have to go over it. But that's the idea. So when we think about this in context, the initial balance is playing a very vital role, because that little scenario I've just run through is based on how traders are reacting to the Asia range. Point in case, right? So that is the next aspect of Market Profile that you are not really taking into account when you trade with a candlestick, because the information is there, but it is not obvious because we're not really thinking about it, right? Because you have to physically kind of put lines in and so on. With this, you're getting a much clearer picture in terms of how the market is behaving in real time. And that's one of the benefits of Market Profile, is that it allows you to react dynamically without too much tension, right? So that's one aspect. Now, the other aspect of the profile is what we like to call the mode price or the point of control, right? So this is this blue line here, which is where the most TPOs traded, right? So essentially, as far as this day goes, that was the fairest price, right? It was the price that most traders thought they needed to take action at, right? And that's important to note because, again, you can see that one day's point of control aligns almost equally with the next day. So there was a lot of interest at 2670, right? And the resulting price action tells you that, yeah, it was pretty solid. It's the fairest price because also this price will always be revisited, right? So as we trade through, we expect that if the fairest price isn't revisited, it is an inefficiency, and this needs to be corrected in some time in the future. So you can then use this in some cases as potential targeting points, right? Where you'd want to get out, especially if you're going for a swing play. Right, so if you're a swing-based trader and you don't intraday trade, or you're trying to more or less turn your intraday trade into a swing position because now you believe that you got a very good price, and you know, with leverage attached, this could easily be a runner, as we like to call it. Then if you've got a runner in play, then these are the kind of levels you're looking at to kind of play that runner. There are other aspects like gaps in value that we need to talk about and so on. But all of these are signs of inefficiency. That means the market needs to correct those inefficiencies. And then we come into the aspect of profile types, right? Each profile represents something. So if I see a neutral or normal profile, which is just a standard bell curve, that tells me that it's all short-term money, right? So the longer-term money stepped away for a while, whilst the brokers juggle the inventory around short-term traders so they can get enough to supply the big money, which eventually results in trend days. So let's take a look at the example. Trend day, big moves. This was more like a test to trend day because of the high volatility, but it was still a trend day because there was an opportunity to profit. Now we like to define trend days in terms of at least 2 to 3 times the balance for me is a trend day. Elongated profiles. 1, 2, 3, 4. Outlier day, right? So nearly 4 times the balance. 1, 2, 3, 4. Another outlier day, solid. This market is getting exhausted. Do you still want to be short? I don't want to be short. It's exhausted. What do we get? We go down. Solid, gap in value. We correct the gap in value. We settle. We start to collect bids. Close of play. Next day. This is where we are. What do we have? Value low. Support. Below here. Additional continuation, possible test. Avoid being short. Tests lead to whipsaws. Depending on your price, you could be out of the game or not. So what do I want to do? I want to hold. I want to wait. I've got a lot of information here. Closes above. Possible upside move. Again, lots of volatility, lots of risk under the J period low. So that's kind of where we want to sit. This is a long-term play unless we can get good price levels. Right, so again, that's what we mean. We move from trend day to bell curve normal profile, suggesting that someone's waiting for something. What came next? Another neutral profile, slightly more elongated, so a little bit more money has come in. So we're pushing either side of the balance. Wider balances almost always tell you that there's going to be fails at points, right? So you're not going to get a straight up day. Tighter balances open up more potential for trend days. So what do we get? Eventually we get a big trend day back up into offers. We hold. Can't take the pressure. Beat down. Longer term trend. Longer term money is holding this down. You were trading short term. So this is a slight swing play, 3-day play. We're back down. Trading value. Inside value. Lots of volatility. Retest. Value high. Break under. We're going back for bids. Right? We clear the bids, but we sit at these bids, expect a reversal. It's a tough zone. So this ties into what we were talking about in the last play, right? So there's a lot you can do at a glance with market profile. You become a more efficient trader. Let's fast forward. Look what's happening today. Similar picture. Trend day, hold. Tight double distribution, normal variation day. Yeah, we're holding, right? So bid stacking, offer stacking, very tight. There has to be a winner. We go close lower, doesn't matter. I don't care about this close. We're sitting within value at support value low. So statistically, we're not breaking out. Bid start, I can see clearly that we've got a bit of bid activity, right? Normal profile. The market is holding. They're waiting for something. We get a bit of a push up to the upside. We got offers stacking. We don't know. This would have been a good short-term play. Some more money's coming. We're broken down again, and then we're stacking, and then we get a sweep, stop hunt. That tells us this would have been on major news, and that was today. I haven't even checked the news, but I think it was CPI. So the market waits. You can see the behavior through the profile. Now we're trading higher. H period, there was an initiating seller out of value high. If we reprint H period, we're going to get a breakout, right? And that breakout is likely going to take us back into offers, right? So this was the best play to have. You could have either been long here or here and then play with the wiggle room, right? We're playing in it. Now we're trading intraday. A breakout will take us in a swing play. So if you'd bought here, then you might want to hold this for a swing play, knowing what's the very least we traded value high. If we get a breakout, we go down here. If we break down, well, you want to break even your trade. So you can really plan around what you're seeing. Because again, if you break down and you don't break even that trade, you're going to end up holding this. So from here, you'd be break even, just covering the print. If we reprint F period, this is a competitive buyer. So we have a responsive buyer on F. If we reprint that, we don't take out the H period seller, which was an initiating seller, foolish, but initiating, and he wins the game, we're going to get the buyers are going to have to cover quick. So we're going to get a mass liquidation, right? So stops are going to trigger, and that's going to take us, and this is the next bid level. So think about this, guys. Depending on where we close, range into 124. Now, if we get a response out of 124, becomes a good buying level. Market is too short. We are multi-day short on the market. Do I want to be getting in the hole for short here? No, not really. A lot of traders will say this is a breakout trade. We don't do that. Professionals don't do this shit. Breakout trade. What breakout trade? Yeah, we could keep adding if you're already short. If you're not short, you don't want to establish you don't want to establish open interest at this level. So you don't want a new position, right? So open interest is not going to increase at this level. It's likely people are going to start taking themselves out or re-establish an open interest to the long side, maybe to protect a short side portfolio of some kind, right? Or a short side position. Maybe it's a hedge, but if open interest comes in, it is going to be for the long side, not the short side. So you want to watch that. Even if we break to the downside, you might have to wait to play volatility to the upside. So this is how we use market profile. It's a different way, of course, for looking at the market. It's the way professionals look at the market, and it's not the way that everyone looks at the market, but it is the best way to look at the market. It gives you perspective. Awesome stuff, guys. I hope you enjoyed the video. Don't forget to subscribe, and till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?